Hello sir, and welcome to the show.
Hello.
Just to start with, we have a big event coming up, which is the Union Budget. So what are your expectations from the government? What's your wish list like?
I think this budget clearly, from a real estate point of view, should give the stable regime of taxation for the new regime what government has initiated, which is REITs.
Right.
If government can able to also give a clarity on the issues and simplification of the foreign direct investment guidelines for foreign funds to really come to India.
Right.
And third is that if there is to have that long-term interest and getting more savings into the residential real estate by virtue of people owning the home, if they could see the kind of incentive for the individuals to invest into the first dream home, so Section 24 and the principal rebate what one can get from the income tax.
Right.
I think these three things are good enough to at least kickstart, because everything cannot be done in a budget.
Right.
But the budget can be actually resolving the long-standing issues, like the REIT taxation, like the FDI simplification, like maybe giving the focus, because 2022, if you are talking about housing for all, then I think it is important to give the concessions or an incentive to buyers to really come forward, and the enabling environment. I think the important part is that if you look at the bottom of the pyramid housing, bottom of the pyramid housing is deprived of banking loans. They are finding it the most difficult to get the banking loan. The overbanked areas, everybody is willing to give a loan. But in the rural areas or in the outskirts of the cities, the banks are not able to give. And the whole ecology of the real estate
Documentation is a big challenge.
Documentation is a big challenge. Or the whole ecology, like there are banks, then there are housing finance companies, then there are NBFCs, and there are micro housing finance companies. I think this whole chain is not overhauled or well oiled to really support the need of the end customer. Different customers will be dealt by different intermediaries. Some people will go to banks, some people will go to housing finance companies, some people will go to NBFCs, some people can go to micro housing finance companies. So I think in a budget, if like they have given the infrastructure status and the bonds for long-term capital raising, which is not part of the net demand time liability calculations of the bank. So similarly, a mechanism to incentivize the financial institutions to look forward for housing finance, and that to housing finance which is relevant, which actually aims towards that housing for all, and could be this budget can be a starting point. I don't expect the budget to really shower every possible benefit, but this budget can give a directional moment which probably will open up.
Right.
So this is what I think.
And how important will be REIT taxation guidelines, because there have been some confusion, and because of that it has become a non-starter in that sense. So clarity around taxation, how important that will be?
I think the clarity on taxation is the only way it will start. Otherwise it is a non-starter.
It's a non-starter.
It is non-starter.
So you're looking forward to that maybe?
Absolutely. And I think it is long overdue. There are developer organizations who have built the marquee commercial buildings and IT services buildings, and really waiting for long period of time, and kept them on the balance sheet vis-a-vis at the cost of their cash flows. So I think it is high time for India to really look at this perspective, which is not something new, which is already running very smooth, existing in the market.
So do you as an investor ever going to expose yourself to commercial portfolio, like commercial assets going forward? Do you have plans on that front?
Specialized asset class, and I do see there is an opportunity. But I see the first level of opportunity is with large commercial real estate developers who are listed and some are unlisted, and they probably will be the first one to really take the initiative forward. Correct. Now I'm not very sure in terms of offering those assets which are there on the balance sheet to the REIT. So, and they continue to hold as a sponsor some money, and as an investment manager, whether a firm like ours will be playing a significant role, we will be very happy to play a significant role. But whether that will be the model will evolve, or the sponsor with the developer organization will also have the investment management arm who probably will take care of the investment management decisions is the thing to watch.
Right.
So my guess is that one thing is for sure, that given the uncertainty around, and we are still not thumpingly in an economy which is we are at the juncture of a hope.
Right.
The reality and the real economy will start reviving soon.
Right.
So my guess is that till that time, I think our current focus on top 5 cities, mid-income, residential, strong regional developers who are bankable and has a brand, will continue to do that, because that is a ever requiring demand.
Right.
At the same time, at an appropriate point of time, but definitely would not be the first one to take the step for it.
Okay.
Because we would probably think that this is the domain for the people who already have commercial assets on the balance sheet. They have a great expertise than the fund managers at this point of time.
Right.
And the investment management as a function, whether they would like to have a third party investment managers like us as a part of the REIT, as a part of the regulation, is thing to watch. So interest, definitely yes. Whether today or tomorrow, may not be today, but tomorrow for sure.
So there is a lot of hope around India now. Sentiments have improved, Modi government, this and that, so many policy announcements. So when do you expect the whole sentiment, improved sentiment, to sort of translate into capital commitment? Is there a timeline that you have in mind? Or LPs still have some concerns?
See, I'll tell you why. Indian LPs do have an apprehension at this point of time, because the first thing is the oversupply situation that hits their mind first.
Right.
They could see that different type of incentives offered by developer is also been sign of poor sales velocity, and that's the way developers are attracting the customers. So every day you read, every day you see, every day you hear. So Indian LPs at this point of time are cautious about looking at real estate investments. Okay.
So is the case with
so offshore LPs actually are not as much cautious about the apprehensions what Indian LPs have got. Okay. The offshore LPs, the apprehension is a little different. They want a stable tax regime.
Okay.
They want a decisive guidelines of FDI, which are conducive for them to free flowing of capital going in and coming out.
Right.
And third is they are clearly watching the strength of the economy to reflect into a currency.
Right.
So their apprehension is not really the apprehension what the local LPs have. Local LPs, because of the proximity to the asset and the information which is moving so fast, so their apprehensions are very different than the other ones. So I think, but as a private equity investor, so individually if they wanted to invest, there are lots of apprehension. But as a private equity investor, you are not really dependent on rise in the property prices to give you returns. If you are partnering with a developer on a project level SPV, then you are accessing the profits of the SPV. So at this point of time, A, the developers are really looking at de-risking their projects. So they are looking at private equity. B, the next 12 to 18 months time anyway is the time required to process the projects, design which is in line with the actual demand rather than a perceived demand. Correct? And third part is that this is a time where developers probably are willing to walk a path, or a landowner willing to walk a path by giving you a deferred payment plan than asking for all the money today, because he also knows that he is a seller. There are more sellers and there are few buyers. In that situation, it is little a market which is buyer's market as far as the funds are also concerned. So you have a choice today to select. So fund also has a choice, which cities, which developers, what is the margin of safety in your investment, correct? And that is a good time for a private equity, provided you could able to present your case of A, raising monies, deploying monies, returning monies, and giving them a feel of quality and quantity of the returns generated by the fund manager with his solid track record. So if you could raise the money, my sense is this is a golden time for the real estate real estate private equity to raise money in the next 12-24 months time, so that the next 5-7 years time, where the economy will start kicking upward of 7%, and you will start seeing the normalization where all these policies sinking into real economy, the per capita income will go up, interest rate cycle will come down, and the confidence level of the end borrower also goes up. Capital cycle of the corporates also moves up, so that commercial real estate absorption levels will be better, the rental will be strengthened, and that is a period where you will see the robust growth of real estate. So I think 18-24 months is time for private equity guys, provided you raise money. Sure.
So also I've seen that, for private equity funds, over the years, you've been in the game for so long now, so what kind of evolution have you seen in the industry, be it from developer side and private equity side? What kind of evolution have you seen in terms of, say, deal structure, the negotiation, the discussion that happens between a private equity fund and a developer partner?
Okay, I think that's a very significant question, and I think we need to really look at the evolution in private equity real estate in India, because 2005 was the inflection point where the FDI got opened up for the Indian real estate, and people have raised monies, GPs have raised monies offshore and onshore both. Now at that stage, if you look at the set of GPs who have raised money or who could raise money in the first leg of the fundraising plan, is all supported by large banks and institutional players. ICICI, HDFC, Kotak, ILFS, those are the names you hear. And those monies were significantly large. Those monies were closer to $1 billion by each one of them, domestic or offshore put together. And look at the investment philosophy at that point of time, because the whole country was looking so attractive. So neither the LPs have ever worried about what cities, what asset class, what risk, how big, how small project they should be doing. I don't think there was a debate on micro management of the fund management, and hence they have given money to invest into Indian real estate. Okay, so broadly. So that part of the money probably have gone into a very long gestation, marquee, though marquee, but long gestation projects which probably have had project overruns because of A, approval delays, B, the cost overruns, and C, the life of the funds probably had limitations to the completion of the project. So that is A part of the era. The B part of the era is where you have seen the corporate-led, not institution-led, corporate-led fund managers evolvers like India REIT, like Redford Capital, like ASK funds. So these are all owner-manager kind of fund managers have evolved in the journey. So my guess is, and those were not came out with a large size of funds. They were mostly domestic. They are driven by the domestic ultra HNIs and HNIs. Though some of them also have raised the offshore money, but the comparative monies of domestic were much larger. And the agility of this second category of fund managers actually helped them in raising, say for example, an average 500 to 1,000 crore each fundraise. Those are the ones where investors have started getting into specifics. Tell me your strategy. Tier 1, Tier 2, residential, commercial. A project is going to be 3-year or 5-year or 7-year project. I think, and investors probably got into every possible details. So I think the investor who probably was bullish on India in the first round, in the second round, they were bullish on India, but they would like to know more about how are you going to manage it. So I think that's the same changes happened.
Are we seeing a step 3 in that?
Yes. What had happened, the part 3 probably has happened, and that is what probably some change I could see, that some of the LPs, global LPs, have started moving away from pooled blind pools to identified pools, or some of these large sovereign funds, some of these large institutional funds are probably would like to be, they started thinking of being present physically in this country and maybe forging ties with the developers directly, or probably they are looking at identified investments.
So by that you mean the GIC Vatika and GIC Brigade, that kind of.
Yeah, I think I mean that. So and that probably has also happened because the quest of a LP to know more about what GP is doing. Okay, or having more say in the investment,
right,
or would like to change the course correction in the process of investment than waiting for the end result to come in. Okay, so I think it gives a very clear signal that the LPs want more say in managing the fund. They would like to see more risk management, more maybe more interaction with the fund manager.
The task of a GP.
Absolutely, yeah. I think that's where the task of the GP will get more challenging. But I think it's not impossible,
right,
because if you could able to manage the expectations,
because there
right?
are tough questions now, and the GP, some of the LPs obviously.
So you have no
are coming to India directly.
Sure.
So in that scenario, is it very tough to solve?
So in case of some of these blind pool investments or some of these identified pool investments, okay, I think in the current scenario, I personally feel that a fund manager need not have any compulsion if he doesn't find a deal suitable to get the risk-adjusted returns.
Right.
So it is no mad rush. Is there no competition?
Right.
If you think there is an opportunity to invest, you will invest. Otherwise, you don't invest.
Right.
So I think that philosophy probably GP will have to take, and I think all the LPs are liking that philosophy.
Right.
LPs are not interested in GPs going and doing a series of deals, correct? But each deal, the risk is identified, risk is mitigated. You can't avoid the risk.
Right.
But the mistakes and the blunders are definitely out of the window.
Right.
So I feel there is a good amount of change happen in the evolution of private equity. The fifth change probably have happened is that post 2009, most of these private equity investors used to talk about equity investments.
Right.
Have changed the track post 2010 and became a mezzanine players.
Yes, right.
Because I think it is again driven by the LPs saying that, look, I don't want and I'm uncomfortable to take equity risk the way your strategy of investment is, but we would be very happy to get that 16 to 18% coupon and some upside, correct? And mostly the domestic investors have underinvested into capital markets by then, because of the market volatility and no returns in the capital market. Lot of money was sitting on the sidelines. That money actually went into high income, high yielding bonds of real estate, mezzanine funds of real estate, and so on and so forth. So there was an era where the equity money completely dried up and everybody was talking about mezzanine and a guaranteed structures or a structured debt. I think today, as we are speaking, there is going to be a rethinking on all these 5 phases what we have seen in the last 10 years. And the strategy of the fund will define by the DNAs of the fund managers.
Okay.
And the DNA of the fund manager will emerge, and they cannot change because of the economy, they cannot be changed by virtue of circumstances. But I think fundamental opportunity in Indian real estate is intact.
Right.
But rather than looking at the fad and fashion, because what is the need today is the debt return of 18%, so people have gone and raised those monies. And my guess is that some of them have also struggled to find deals which will give them a risk adjusted 18%.
Right.
So you have no compulsion to really, but because those are shorter tenor funds, there is a shorter period drawdowns. I think there was an amount of conflict of identifying the deals. So there is going to be pressure on that side. So I think we as a country need equity oriented funds, because most of the developer balance sheets today are life to date, peak debt is sitting there. Okay, so debt is not the requirement. They need to deleverage the balance sheet. They need to de-risk the business model, and hence I think the equity part of the real estate is more important than the debt part of the real estate. So my guess is that going forward,
So So
you will see the
equity flavored transactions will pick up.
Absolutely.
You are one of the few players who is still doing pure equity transactions
Yes.
in that sense.
Yes.
What do you tell your LPs? How do you convince them for this kind of
Absolutely. I think
structure?
see, what we think is that if you want to deal with a regionally strong developer,
Right.
which is the key anchor to your investment thesis, the second anchor to your investment thesis is your location. The third
First
thesis,
developer, second
location, and third thesis is that you have a good entry price, the risk adjusted entry price.
Right.
Fourth is the structure of risk reward with the developer and the fund is in win-win, okay, and not favored on one side or other side.
Right.
And the last part is the relationship part. So if these 5 processes has to be followed in that same sequence, then only you get returns. So our fundamental story is that if you want to deal with strong regional developer, my guess is they are all open to evaluate deal with the fund like ASK on an equity basis, rather than me telling them that, look, I am interested in Indian real estate, but look, give me a guaranteed money first, or give me a preference over your cash flows. Then the body language of a developer could be very different.
Right.
You can do that when the developer has got no choices. But the developers where we are investing, or we would like to invest, probably are the right fit for the equity investment.
So let me ask you at a broader level, there is so much of talk about India, Modi, this and that. So compared to last year, do you think we are in a condition to sort of pulling more private equity capital in real estate market?
See, my view is that India's story is so interesting and alarming
Right.
compared to the global markets.
Right.
Having said, the opportunity of not only the opportunity of demand side in India because of the younger Indian demographic profile,
Right.
but India's balance sheet getting repaired by virtue of the oil prices coming down, where the Modi has no role to play.
Right.
So Modi or no Modi, my sense is the India opportunity exists and it is continue to exist irrespective of whoever is the government.
Right.
What can
But
happen
somehow
is
there is a sentiment
what can happen is that domestically you don't really invest because there is a Modi government and hence you are investing.
Right.
Correct? We have seen monies coming in the previous government, all the money we have raised before this government could come in. Correct? So I have a reason to believe that it is an opportunity is more important than the political leadership. Internationally, maybe I tend to agree with you, because the signal what we have sent in the past to the global LPs is that we are inconsistent, we can be as retrograde as can change the policies and we can apply it to the so there is a fear whether they can take the capital back, and because the government has no spine to really in the past to really take decisions which probably hard enough, and moving from a social approach to really an approach which cut down the subsidies and pass on the cost to the end customers. I think because of this new government, and that's where I probably feel that there could be a delta improvement because of Modi. So opportunity in Indian real estate exists irrespective of any government. Okay. Because of these government's positive action, I think the opportunity only multiplies.
Just last 2 questions.
Yeah.
Last time, for this financial year, you had told me that you have 600 crore is the size of money that you want to invest this financial year.
Yes.
So do you have a similar plan for next financial year? What kind of money can we see ASK investing, like a ballpark figure if you can share with us?
See, because ASK is going to raise 2,500 crore by virtue of our the domestic fund as well as the offshore fund in this 12 months time. You can 30 to 40% of the capital will be getting deployed in the next year as well.
Next financial year.
Yeah, correct. So my sense is that 750 to 800 crore will be the deployment pattern for the 16-17 as well. 15-16 obviously you will be doing around 600 and odd crore. But at the same time 16-17 also you will be doing 750 to 800 crore. By then you have hardly any money left. Then again you will start looking at constituting the opportunity, whether international or domestic.
And that 700 figure that you are saying will come from both offshore and domestic that you're currently raising.
So, no, I don't think the sales volume have increased. primary reason still remains that the end customer is still not
away from the market.
he is still not prepared his mind, and I don't know what is that he is looking at, what stimulus, whether it is interest rate stimulus, whether it is a price correction stimulus,
Right.
or some kind of confidence by he having his income looking little more positive than what he is having today.
Right.
So I think his income, interest, and the deal, the so-called the value deal, these three things simultaneously are required and not in a sequential manner.
Right.
So today, by only cutting interest rate is not going to work.
Okay.
Neither it is going to work only by increasing the income levels of people.
Right. Okay.
But we need income levels signaling the increment and bonuses and no job retrenchments,
Right.
plus the interest rate signaling of 50 basis point downward direction. And coupled with that, developers anyway they are willing to give a priority to cash flow than the profits. So by virtue of reduction in the per square foot cost,
Right.
whether it's a finance incentive,
Right.
whether it is an incentive structured in a manner in which it actually gives value to the customer,
Right.
those three things has to be required, and I think it's need. It's better to be late than never.
Right.
I think this is what industry probably. Ultimately, at the end of the day, the revival of the residential real estate market can only be possible when the end customer buys.
Exactly.
There is
right.
no question of intermediary, broker, or a wholesaler, or whoever you can call it,
Right.
can really revive the market. Is a very clear fact. Okay.
Right.
Now the fact of the matter is that those three things what I mentioned, income, interest rate, and that confidence of income, okay, will lead to preponing the decision. Okay, and we can see the sales velocity improving, sales volume increasing, but absolute sales number may be stable or downward. So there is less possibility of property prices going up, the property prices remaining the same, or property prices melting it down 10-15% by virtue of this whole incentive for the customer to prepone the decision,
Right.
is the likelihood for the next 12 to 18 months time. So we are in a very interesting era.
So I mean, thank you so much. It was
Thank
a
you very
pleasure
much.
talking to
Thanks.
you.
Thank you
so
very much.